Welcome to the Rev Room. Today we're going to talk about all things tax, all things that we've learned, or Wayne and the tax team have learned with regards to this new tax season that we're almost through. Welcome, Wayne.
Thank you, Francois. It's good to be here.
Excellent. So, Wayne, what has happened in this tax season and what's...
Well, let's refresh quickly on the tax season as well. So we're well into the tax season. The first deadline, which was the 20th of October, and that was for taxpayers who are non-provisional taxpayers, has come and gone. So we're now into the remainder of the entities. So the next deadline that we need to meet is the 19th of January, and that's when the provisional taxpayers have to submit their tax returns and also the trusts. And then finally, on the 28th of February, the companies have to submit their tax returns. But the aim is really to try and finish in the course of November and finish all our 2025 returns and really be up and ready to actually start the new calendar year.
So, Wayne, we're talking about submitting in those deadlines. When we talk about the deadlines and submitting, then you don't have to wait for the deadline before you can submit.
Not. No, absolutely not. And it's actually better to do it as soon as possible. But obviously, when you have a very large clientele, you need to spread it out and make sure you can meet the deadlines comfortably. And that's what we're doing. I mean, where we are with our companies now, we're basically at about 90% done. The trusts are just about done, and we've got about 30 provisional taxpayers to submit their returns. So we're well on track, and we're ready to start the new year well on track. Excellent. But we've also had a lot of learnings. Nice. So up to now, there's been some learnings, and there's been some changes from a SARS perspective, which I'd like to take into account. Okay,
let's hear that. Yeah.
So if you look at the SARS situation, so for the first time, really, I mean, SARS has always been proactive in asking for documentation, but they've already upped their game now in terms of what they're asking, and they've been a little bit more vigilant, and I think they can see the technology coming into their questions and what they're asking. Some of the changes we've seen this year, in the past, really, you would get a verification letter, SARS would ask you for various supporting documentation, and you would submit that documentation within the prescribed 21 days. What SARS is also doing now is that they do more than one verification letter. So they would typically ask, okay, they want to see the medical records and the copies of the invoices, the prescriptions, the proof of payments. You send that off and all goes well. And then suddenly out of the blue, another verification letter comes through. And this is on a different matter, which was not raised in the first instance. In this cases we've had where incomes have actually decreased over the year, they want reasons for the decrease in income. So then you have to submit a second verification or supporting documentation to support that verification. So they really are being they're scrutinizing the returns a lot more vigilantly than they have in the past.
So you're saying that there's a domino effect with regards to when you SARS ask for one item or one verification, they could continuously ask for a number subsequent to the first one.
Absolutely.
And you're seeing this a lot.
We're seeing this a lot in this particularly in this 2025 tax season, which we never saw before.
Wow.
Which is interesting.
Yes.
So it shows that SARS is actually digging deeper and deeper into the returns. We've had a lot of cases where we've had reductions in income. And in most cases, legit reductions of income, but they're still queried. And that's what I got a little bit angry about, because SARS should be picking that up. So we would have cases where a client has a company, they receive a salary, and then in the 2024 tax year, we put them on the payroll, say in the middle of the year. So therefore, they had income from the business, which was not subject to PAYE for 6 months, and they paid PAYE the second 6 months. Then in the 2025 year, obviously, they're now on the payroll system, and they're on the payroll system for 12 months. SARS are still querying, why did their business income reduce? But effectively, it didn't really reduce. But if you take the two income streams together, it actually went up 15%. But you have to prove that to SARS.
Do you think it's AI that they're using?
It's purely AI. Okay. It's purely AI, because those returns, those verifications are coming through thick and fast and very quickly. One of the other things that we found for the first time this year is that SARS have always queried income coming into your bank account, typically post your return. This year we've had a few instances where we submitted the return, same day we've got the verification letter, and there's a verification from SARS asking, we have evidence of other income in your account, please advise why this was not included in your tax return. So this is not someone scrutinizing those returns because it's coming a couple of hours after submission. So now SARS are actually querying and looking at your bank statements prior to the submission. And that's a big change. So now they've been proactive in querying that income, whereas before it was probably 6-12 months later when after you submitted. Now they're querying on the same day, we have evidence of money coming into account, please explain.
Wow. So what does this mean for the taxpayer?
Well, I think it means the taxpayers have to finally accept that SARS is now, they're now a very, very strong organization. They're querying documentation, they have the tools, they are spending a huge amount of money on artificial intelligence, on third-party data. They have the tools to get it. And secondly, they are bringing in highly educated personnel to manage certain areas of SARS. They're no longer an organization that has a bunch of clerks reviewing the documentation. They are highly capable people now at SARS, and the taxpayer needs to be put into their tax return all the income and also all deductions. And I think that's going to be a challenge going forward because the taxpayer, on average, especially not so much the companies, but typically the sole proprietor or the sole business, does not keep records. We always say to them, please make sure you must keep your records, etc., keep the proof of payments. They promise to do so, but it never happens. You come the new tax year, and then they're scratching to find the information. And that's why we're trying to, if you have a commission income, or you have a travel allowance, or you're running a separate business, no longer can you run a manual system. It doesn't work. You need to put in a basic accounting system that gives you bank feeds, that you can upload your supporting documentation on a daily basis, or when you walk out of the shop or the business where you're buying, upload that information and put it straight onto your accounting package. And it's there. Typically people lose documentation, or they keep the documentation in their cubbyhole in the car, and when they retrieve it 12 months later, well, it's thousands of blank pieces of paper because the petrol slips are faded, all the slips are faded, you can't read them anymore. You put it on the cloud, it's there for eternity.
So what would you say to someone who says that that's a bit expensive to pay for the software or the technology?
The thing is, I always say to all my clients, it's far better to pay for technology than to pay for someone to sort out the documentations on a manual system. You end up paying a lot more. Your subscriptions now are less than R1,000 a month for a really good accounting system. We use Xero accounting because it gives us the opportunity to do the bank feeds, to do the bank recs, to upload the documentation. But including Xero, there's lots of accounting packages out there that you can use at affordable prices. The cost of doing this manual process just doesn't work anymore. I had a client come in the other day with a checkers bag full of documentation, and I said to her, it's going to take me weeks to sort this out, and it's going to cost you tens of thousands of rands to sort out all this documentation. And I said, if you're on an accounting system, you can put it in. And she said, no, she'll do it, but it's a pain. I liken it to, I remember when I was growing up and you could join the gym, and when you joined the gym, there were annual packages and they cost like 40% of the annual, if you went on an annual package. But they knew what they were doing. They knew that people would come for 2 months and then give up. It's the same with the documentation. They promised to keep the documentation, and after 2 months they give up because something happens in their lives. They're busy, and suddenly 6 months have passed, and they haven't tracked their log sheet. They haven't kept their documentation. Be smart. You have smart technology now. You have smartphones. It's not difficult. It's a mindset that people must change and keep their documentation.
So if you don't keep your documentation and you get audited and you need to supply documentation and you don't have it, is that disallowed? Is that expense disallowed?
What SARS is doing now, so I know in the past people used to say, no, we print all our bank statements and we write on the bank statement what it was for, and SARS generally accepts that. That's no longer the case. SARS is actually getting very, very particular, and they're asking for the supporting documentation plus the proof of payment. So if you don't have the documentation, SARS is going to disallow those expenses.
As simple as that.
As simple as that. And you actually have no grounds to stand on.
To argue, okay.
I mean, if you look at the recent article that's come out in the business press, and that SARS is going after the diesel rebates. And really, they are asking for all the supporting documentation, which the companies or individuals are unable to provide, and SARS are going after them one after the other to disallow those diesel rebates, which is worth billions.
So the advice is to keep everything on record, keep using the technology at hand, and be prepared.
Be prepared. You know, it's not going to get any easier. SARS is building capability. They're going to ask more and more because there's money for them there, and it's easy for them to reject it, and the taxpayer doesn't have a leg to stand on because he can't provide that supporting documentation. Once it's out there, it's gone.
Yeah, it's done.
So when we look at the prescription period for supporting documentation or for SARS to do a review of your income tax return, so the prescription period is typically 3 to 5 years, but SARS has got 5 years to actually request supporting documentation from you. Now, the prescription date starts from the day you submit your tax return. So that's critical to advise. So if you're submitting your 25 tax return on the 20th of October, it's 2025. They've got till 20th of October, or basically 19th of October 2030 to request supporting documentation. Where there's any fraud or misrepresentation to SARS, there's no prescription period. So they can go back as far as they like. We've recently had cases where people are coming in and SARS have queried a return from 2007. So that brings me down to say, well, look, they're going back 18 years. And I'll say, well, did you submit a return in 2007? No, we didn't. So I'll say, well, if you didn't submit a return, then prescription hasn't started. So, because you haven't submitted the return yet. So I always say to the people that say, no, but they have some outstanding returns, SARS are not querying it. I say they're not querying it today, but it doesn't stop them querying it tomorrow. So it's better to get your returns up to date. So and then you know comfortably in 5 years' time, SARS can't come back to you. But if you don't submit those returns, and whether they're 2018, 2019, 2020, SARS can come back and query those returns at any time in the future. It's not worth the risk.
So the rule is be prepared, don't take SARS for granted, and ensure that you are compliant annually.
Absolutely. It's the only way. You don't have actually any choice. And then just other thing, we're going to talk about maybe a recent case we saw.
Yes, let's do that.
So there was a case published quite recently in the press. Actually, it was last week. We saw a case come through. And I'm just going to read a little bit here because I just want to make sure I get it right. So SARS has scored this is published on the 24th of October. And SARS has scored a victory in court in bouldering its aggressive push to pursue taxpayers who are trying to skirt or evade their tax obligations. In this case, SARS applied the General Anti-Avoidance Rule, GAAR, to a taxpayer who had been channeling their remuneration through foreign entities to avoid paying taxes. The court agreed with SARS, finding that the sole or main purpose of the structure set up with the taxpayer was to obtain a tax benefit, and that but for the arrangement, substantial income tax would have been paid. In this case, the payment that had to be paid was 46 million rand. So basically what the outcome, the findings of the court, what they finally said was arrangements taken primarily for tax reasons, when technically compliant, are now firmly in SARS's radar. Put simply, where tax drives the transaction rather than follows it, the arrangement is at risk. I'm going to repeat that. Where tax drives the transaction rather than follows, the arrangement is at risk. So tax should always follow the business structure of the business or any arrangement. Tax doesn't drive it. And you are then coming into anti-avoidance measures, and SARS is going to come after you.
Very important ruling.
Absolutely.
Yeah. Thank you for listening to the Rev Room. If you have found this useful and you would like to make any comment, drop any comment, like and subscribe, and quite importantly, share this with someone who might find it useful, insightful, who might get benefit out of the great advice and tips that Wayne has shared with us.
And if there's anyone else that needs any information on any other tax matters, share with us and we can arrange a podcast to cover that subject matter as well.